Hello, good evening. It's Adil Fazal, market analyst at CFDs.com, bringing you a review of US markets. Currently 6 p.m. at present, so we're halfway through, well, more than halfway through. A couple of hours to go before we close, and let's do a summation of where the US markets are headed. Now, this video is being brought to you by CFDs.com, the spread betting and CFD brokerage. Certainly explore the products and services on offer, and certainly take advantage of the potential bonus offer that's available. www.cfds.com. Alternatively, you can visit the educational site, which is www.cfds.education, to certainly learn more. Okay, in terms of US markets, basically the summation, we had the Asian markets down overnight. Okay, the Hang Seng and the Shanghai certainly were weaker overnight. We've had a barrage of economic data today. I'm just going to focus on the US market data for now. Overall, net it was negative. Okay, initial jobless claims, yes, that was probably the only bright spot. Continuous jobless claims were certainly weak. Durable goods orders exceptionally weak. Pending home sales weak, and then obviously that's certainly we also had the Kansas Fed manufacturing data as well. That was certainly weak. So everything overall net weak, and certainly a cause for concern, especially for the bulls. Adding the fact that we had the rumours with regards to a potential OPEC supply cut, which obviously was negated later on, and the Saudis certainly are not agreeing, neither are the Iranians. Okay, so it's just the Russians that are proposing it at present, which obviously sent the FTSE 100 above 6,000 before it subsequently crashed along with US indices. Okay, so where do we stand? Where are we going? Let's try and work this market out. Okay, so given the dismal US economic data, obviously from a fundamental perspective, that's very bearish, especially on oil and commodities and growth in general, and that certainly hurts the market. Now let's look at the chart of the VIX. This is an important chart. The chart of the VIX currently has a HNS formation, the target remaining gap fill. So the VIX certainly has held resistance. Okay, now we've had a stellar rally in the US markets now, given the fact that we are now coming into support on the VIX. Now, bear in mind, like I said, we have had quite a stellar rally in the US market, so the VIX is now into support, and it's something to observe as well for trading. Now, the Nasdaq itself, on daily chart, you have an inverted head and shoulders formation. You have quite a nice bottoming tail, so everything looks good from that perspective. The 60-minute chart, you have a bullish engulfing candle, and you certainly are building a base around this 4120 level on the Nasdaq. Looking at a 10-minute chart of the Nasdaq itself, we are now coming into resistance. As you can see, that key diagonal trend line certainly was triggered, and you are looking at a potential drop down to the potential 4150 zone on the Nasdaq itself. So certainly into resistance now, and you are looking at a risk-off tone in the markets. Okay, now the Nasdaq is always cross-verified by the biotechs. Biotechs still remain weak, although we have put in a bottoming tail in the 60 minutes. My main concern in the biotechs is the fact that we failed to hold that pivot low. So really is a cause for concern. So the biotechs certainly have pushed lower. We've closed this gap here, which is quite instrumental, given the fact the market certainly has bounced from there and is certainly respecting that for now. But given the fact that we've made a new low, that is a cause for concern. Now, we have the next support level is seen at 2600. So the market certainly is vulnerable, very, very vulnerable to a further drop. So again, that's something that we need to take into consideration as well whilst when trading. Okay, folks. So that is certainly some food for thought as to which way the market will go. Now, the biotechs, again, keep an eye on that support zone, and obviously gap fill is an important support zone too. Now, looking at the actual semiconductors, semiconductors have held that pivot low support here. Okay, we've negated the gap fill, so gap fill certainly has failed. We are looking at potentially making a double bottom for now, and all eyes will be on that level. Now, you do have this inverted head and shoulders formation. Certainly a potential for an inverted head and shoulders formation, but for now, given the fact that the biotechs certainly are weak, the semiconductors certainly will remain vulnerable too. So certainly in the same zone, and certainly something to certainly focus on and keep an eye out for as well. Okay, certainly something interesting. Okay, so that is the situation on the actual semiconductors themselves. Now, if we can keep this higher low, then the market bias certainly remains bullish. If not, then we certainly are negative. So again, take that into consideration when you're trading. So if the biotechs can hold that gap fill support, if the Nasdaq, or should we, semiconductors can hold a higher low, and if that Nasdaq can hold the actual higher low too, well, we've already held it once. If the Nasdaq can remain above 4150, then you certainly have the bulls back on board and back in control too. Okay, right, now looking at the S&P 500, again, you have an inverted head and shoulders formation. You're consolidating on the right shoulder, so certainly bear that in mind. Looking at the daily chart certainly is holding that support zone. You clearly have a symmetrical wedge of where the market obviously is consolidating within. So you're looking at that right shoulder, looking to potentially break out. Now, the S&P 500 on a 10-minute chart, let's just observe this. So we certainly are oscillating between support and resistance. We obviously close that gap. That gap certainly is not being respected thus far. Again, all eyes on the weak economic data that came out from the US today. Although having said that, even though the data was weak, we still failed to close that gap at 1870. So that certainly is some food for thought as well. Okay, so for now you have support, and there's a zone here at 1880 down to 1870, and that's certainly something that we're going to be keeping a keen eye on, okay, going forward. But bear in mind, we do have an unfilled gap at 1870 that could be vulnerable to being closed, so that certainly is something to contemplate too. Okay, now the cross reference now with regards to the Russell. So if I just bring the chart, the Russell 2000. This is the chart of the Russell 3000, by the way. So Russell 3000, you can clearly see that you do have the same concept of an inverted head and shoulders formation, and the market certainly remains vulnerable to potentially playing out. Looking at the metals, S&P metals on a 60-minute chart, certainly have come off the lows, and certainly is showing signs of promise, and obviously a potential rally on the cards as well. And now let's just have a look at each sector one by one. Let's have a look at the consumer discretionary, certainly a bottoming tail there. Industrials, bottoming tail there. Utilities, certainly a very impressive day in terms of the rally itself. Consumer staples, yes, certainly quite an impressive rally again, even though we had the weak data. Home builders certainly remaining certainly holding support for now anyway, and you have an inverted head and shoulders formation there too. Retail, bullish engulfing candle, again inverted head and shoulders formation. Energy sector, let's just look at the energy sector. This is going to be quite interesting. Okay, so daily chart, energy sector at the moment. Okay, the energy sector certainly is putting in a bottoming tail, certainly has bounced off the low of the intraday, but you are into potential resistance now with Saudi obviously failing to agree to that cut. So again, that's something to certainly take into consideration. Obviously you have the unfilled gap below too. Okay, so again, it certainly seems that the target for now will be that unfilled gap. Once we close that gap, then we'll have to see which way the market wants to go, but for now all eyes on that gap fills support below. Okay, so the energy sector certainly remains weak. Financials, we certainly bounced off the lows, and given Monte de Paschi and the concerns with regards to that, obviously the markets will be firmly focusing on that too. Okay, now the Shanghai, again, all eyes on the Shanghai on the weekly chart, whether or not we can hold that 200 MA overnight. Again, that's something that we're going to be discussing and potentially contemplating with regards to holding or not. Okay, now the German DAX itself did actually close that potential support. We had a gap fill support at 9575. The German DAX certainly bounced off the 9600 level and then subsequently finished at 9630. Now after hours, the German DAX certainly has been under pressure. Currently trading at the 9660 region. So given the fact that we did make a pivot low at 9600 and now currently trading at 9660, and therefore does certainly remain vulnerable to further downside. So again, that's something that we certainly need to keep an eye out for with regards to future market direction. Okay, so looking at the actual charts themselves, also with regards to the yen certainly seems to be finding support. We have BOJ overnight So all eyes on the BOJ and which direction they take. Okay. Again, emerging markets, potential bottoming tails, certainly is showing signs of a potential bottom and a reversal for the interim, and that obviously does bode well for the global equity markets as well. The chart of copper looks exhausted and certainly is looking like a potential for a H&S reversal, left shoulder, head, and then obviously looking at right shoulder, and then obviously down you go. So certainly is looking weak from my perspective. Now, going back to the S&P 500, now if it weren't for the weaker home sales and the weaker durable goods orders, then this inverted head and shoulders certainly would be in play. Given the fact that the weaker economic data has arisen, unfortunately, then the catalyst is not exactly there, unless the Fed decides to do a reverse and dictates no more additional QEs and they decide to change, or whether the Chinese markets have some sort of stimulus. One of the central banks around the world will need to have that stimulus to really get this market going. So again, that's something that we certainly need to consider as from a day trading perspective. Now, looking at the price of oil, given the fact that the market has been very sensitive to the price of oil, let's bring it up for you. Clearly see that you got a topping tail there on the basis that the Saudis do not confirm the Russian talks, etc. And the daily chart on the actual contract itself is quite stellar. I mean, quite impressive. And given the recent rally in the equity market and given the market participants, certainly does remain bullish. Okay, to a large extent, given the fact that you do have an inverted head and shoulders, and we're above that inverted head and shoulders formation. Okay, so I think that's a market wrap with regards to the US. Again, keep an eye out for the S&P 500, which is cross-referenced with the Russell. Okay, and they are both indicating to you that they want to go higher on the larger time frame, so even the 60-minute time frame, and also the daily one as well. So you clearly see that you have this symmetrical wedge. You're coiling, and the market could certainly break either way. Okay, that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.